Most people believe the Great Depression started in America, but the spark came from a small Austrian bank. Credit Anstalt, a respected financial institution founded by the Rothschilds, carried the weight of Central Europe's economy. It wasn't a Wall Street titan, just a Vienna bank managing deposits, loans, and industrial investments across borders. But beneath its polished marble halls, risky loans haunted its balance sheet like ghosts waiting for exposure. Europe after World War I was rebuilding too fast, borrowing too much, and promising more than reality allowed. Governments were drowning in reparations, industries in debt, and citizens in desperation masked as confidence. Credit Anstalt absorbed another failing bank in 1929, inheriting toxic assets disguised as opportunity. It was praised as heroic, but the rescue was a Trojan horse that hid financial cancer. When auditors revealed staggering losses, rumors leaked, and whispers spread faster than official statements could silence them. Depositors rushed to withdraw money, lining streets, panicking before facts were verified or confirmed. A run on the bank began, not with gunfire, but with fear and ink-stamped withdrawals. Austria's government intervened, injecting funds, insisting stability was restored, but trust had already evaporated. Investors interpreted silence as disaster. Markets punished speculation. Panic became the new currency. International lenders refused support, fearing contagion more than cooperation, accelerating the collapse they hoped to avoid. By May 1931, Credit Anstalt officially confessed it could not meet obligations or restore liquidity. The news sent shockwaves across Europe, dismantling confidence and annihilating the belief in endless growth. Banks in Germany faltered, corporations failed, unemployment soared, and faith in the system shattered. Governments tightened borders, raised tariffs, and blamed foreign nations, deepening economic fractures. The collapse triggered currency devaluations, disrupted gold reserves, and fractured diplomatic relationships overnight. Confidence, once broken, became impossible to rebuild with promises or policy speeches. Stock markets tumbled, trade collapsed. Economic alliances turned to accusations and retaliation. The crisis spread to London, forcing Britain off the gold standard, a seismic shift in global finance. With Britain abandoned gold, the world understood stability depended on perception, not metal. The United States felt the shock too, as exports plummeted and production froze. Unemployment exploded, businesses closed, and ordinary citizens became casualties of global finance. Leaders insisted the system was strong, yet statistics betrayed every comforting statement. America became both victim and indirect participant in Europe's financial wildfire. The collapse proved banks weren't isolated structures. They were interconnected arteries of international survival. When one artery blocked, the body global trade suffered a historic heart attack. Credit Anstalt wasn't just a bank failure, it was a domino that altered world history. It demonstrated how opacity and delayed acknowledgement can transform solvable problems into global catastrophes. The Depression deepened. Radical ideologies emerged, and political landscapes transformed with dangerous momentum. Economic despair became a breeding ground for extremism, nationalism, and conflict. The world didn't just lose money, it lost trust, patience, and stability. Credit Anstalt's failure taught governments the cost of secrecy, denial, and delayed intervention. But history's lessons are often archived, ignored, or rewritten in boardrooms and official reports. The true pandemic was amplified by uncertainty and absence of transparency. A single bank in Vienna changed the course of global markets and political destinies. It proved the financial world is more fragile than leaders claimed, more interconnected than citizens realized. When systems depend on confidence, confidence becomes the most valuable but fragile asset. No weapon destroys economies faster than fear unleashed at the right moment. The collapse warned that numbers on paper can devastate lives across continents. Banks were seen as foundations. Suddenly, they looked like glass towers balancing on debt. Every government reaction, tariffs, devaluation, austerity solved one problem while creating three more. The Great Depression wasn't born in a single moment, but that moment accelerated its descent. Credit Anstalt became a historical reminder that contagion isn't only biological, it can be fiscal. The fall reshaped global policy, educated central banks, and terrified generations of economists. The lesson seemed clear: prevent panic, disclose risk, strengthen reserves, regulate aggressively. Yet modern crises repeated similar mistakes, wrapped in new terminology and digital speed. 2008 echoed 1931 with cheap credit, complex assets, and denial until collapse forced confession. Today's markets are faster, algorithms react instantly, and panic travels in microseconds, not newspapers. If a single bank triggered global depression in 1931, imagine the transmission speed now. Interconnected systems magnify vulnerability, and debt has multiplied beyond historical comprehension. Trust remains the currency markets use before cash, gold, or digital assets. When trust dies, money becomes paper, metals become speculation, and systems implode. Credit Onstalt reminds us that collapse often begins quietly, legally, and mathematically. Citizens hear about it only after decisions are irreversible and losses unforgettable. Every crisis begins with denial, followed by fear, then intervention, and finally revisionist history. The 1931 collapse wasn't random. It was predictable, warned, ignored, and accelerated by pride. The power of one institution to impact the world never disappeared. It evolved. Central banks promise confidence as a service, stability as branding, liquidity as a solution. Yet liquidity doesn't fix insolvency. It delays reckoning, disguises failure, and multiplies risk. The next crisis may not resemble 1931 superficially, but structurally, patterns echo loudly. Debt addiction, hidden exposure, political denial, these forces remain unchanged beneath modern packaging. The world learned lessons but applied only the parts that avoided short-term discomfort. We built larger systems, deeper leverage, and faster pipelines for panic. Credit Onstalt collapsed because leaders reacted too late and citizens learned too late. Intelligence decided the winners and casualties of global finance. 3 takeaways survive. Transparency prevents panic, debt demands respect, and confidence is priceless. History warns, not through prophecy, but through patterns we choose to ignore. The collapse didn't just spread the depression. It spread a warning still relevant today. Economic stability is illusionary when based on fragile trust and unmeasured leverage. Understanding past failures is the only safeguard against repeating financial tragedies. Because crises aren't born, they are built quietly, slowly, and collectively. And the next Credit Onstalt may already exist, waiting for a spark, disguised as silence.